Today we're going to be going over 3 examples why you should have an annuity. Those examples are actually Mama Donna, Miss Val, and Auntie Nita. All right, but before we get into those examples, I want to give you a couple of stats. In the first 6 months of 2022, there was $3 trillion that was lost in the stock market, specifically in retirement accounts. 401k, 403b, TSP, IRA, 457, you lost money. Doesn't matter who you are. There's another stat I want to give to you as well about annuities, and to read it from here. LIMRA, which is a research firm funded by the insurance industry, so they are a third-party organization, okay? They reported that annuity sales have hit the highest level since 2008. Last year, $255 billion worth of annuities were sold in the US. That's up 16%. You want to know why? Because people are afraid of losing their money. Money that you've worked for hard all of these years, right? In the first quarter of 2022, the US annuity sales went up to $64 billion, a 4% increase. Why? Because the market was tanking. People were losing their money. They was nervous, all right? And then lastly, annuities fill the void for people who are more risk averse in today's marketplace, right? This comes from the Wall Street Journal. The title, Annuities, Investors are pouring billions of dollars into high yield fixed index annuities, right from the Wall Street Journals, guys. And so with that being said, we're gonna hop into our topic today and dive into some stories that'll relate to you.
So babe, let's talk about Mama Donna's annuity, because this was obviously a client very near and dear to our hearts, and she's a nurse. She had been in nursing for over 30 years, well respected in her industry. And what she didn't know was that she had a variable annuity. So she had no clue when we sat down with her that while her money was going up, it could also go down. And so we actually sat down with her during the pandemic. So kind of talk a little bit about how that meeting went.
Well, it was actually amazing that we got to her before the pandemic. I remember it was September of 2019. And we had been going back and forth. We had just got into the industry, really. We were just really starting to learn about annuities, learn about how it could help our family members. And so I remember the first time telling her about it, she was like, yeah, okay, son. You know, but then next time, after a few months, followed back up with her, she wanted to sit down and listen. Gratefully, because of Dee, right? Dee was able to like, hey mom, I think you need to take a listen to what they're talking about. So we had noticed on her report, on her annual statement, that she had lost over 20%. Now mind you, this money was sitting at a place that she no longer worked at. It was just sitting there, and she was losing money. And if like anybody else, I know I don't like to lose money.
Nobody wants to lose money, but I wanted to quickly interject there because you said something super important and I don't want people to miss it. The reason she eventually sat down with us is because we kept talking about it.
Right.
I think oftentimes as new entrepreneurs, as new insurance agents, we get discouraged when people don't take us as credible or don't support us in the beginning. But because we remain steadfast about, hey, we know what we're talking about, we believe in this product, the proof is in the pudding, we have the numbers to back it up, you should look into an annuity as an alternative retirement plan. So I just wanted to share that because oftentimes new entrepreneurs, they get discouraged.
Yeah, and so she finally said, okay, all right guys, let's sit down, let's meet. So we do our initial conversation. She sees that she lost money. And then she says at the end of that first meeting, okay, I'm ready to move forward and do this annuity, right? So we draft up the paperwork, we get it approved, and then now it's time to initiate the transfer. Pretty much we're gonna move the money from her variable annuity now into an index annuity, right? Uncle Sam, IRS allows you to move your money one time a year from one qualifying retirement account to another retirement account without any tax and without any penalty, right?
That was super important because on another episode, we shared the tax penalty from your personal story, but okay.
Absolutely. And so how many times have you heard, or even you may say that, I got a guy, right? Which is typically a financial advisor. So Mama Donna had a guy. Well, she was actually a lady. she was actually a lady, but she was a financial advisor. And so immediately once she got the notification that the money was being transferred, she began to call Mama Donna. Now, mind you, Mama Donna hadn't heard from the lady in years.
Yeah.
All right. While her account was under management, never heard from her, right? Especially during the times where all the money was being lost. But when we initiated the transfer, she stepped in and tried to stop it. And, obviously the client, Mama Donna, had more experience with her, so she wanted to hear her out. All right. Now, it's funny how things work. Her son actually called me and said, hey, man, you need to get over here right now. Right? Because this financial advisor is over here trying to convince her to keep her money in this account.
Yep. That was so interesting because what we saw, which is what happens so often, in our case, it was Mama Donna. For you, it could be an uncle, it could be a grandparent, it could be your parents, it could be you. But what was so interesting was we knew that agent only saw Mama Donna as a transaction. And we got into business to transform the wealth of families who look just like you and I. That was the ultimate difference, making sure that whoever is currently advising you on how to build wealth, on how to save for retirement, is not just out to make a quick dollar, like so many people are. And you could see it. The young lady had not spoken to Mama Donna in years. And she saw it. Well, maybe she didn't see because she probably wasn't really tracking her account. But if she was tracking her account, she could see that she had lost thousands of dollars.
Yeah. And so when we got over there, it was interesting because we're new, we're fresh, we've only been licensed a year and a half at this time. Who are we, to go up against a financial advisor with decades worth of experience? And so what I rested assured, what I put my trust in, my rest in was that the financial institution that was backing us, right? The actual insurance company that had been around for 100 plus years, right? And what they stated in their documents, 100% principal protection, the ability for growth for your money, and a lifetime income that will never expire, right? So even though I was only a year or two into the industry, I had 100-year backing behind me. And so as I sat with the financial advisor, she tried to go back and forth with me. And I just remembered one thing was to remain calm, right? Not get combative and just state the facts, right?
I think so. If we pause there, our motto at the Wealth Academy is a hybrid of trust and credibility. Our clients trust us because many of them have personal relationships with us directly, or people that we know, someone within our network, right? Friend, acquaintance, colleague, whoever. And then the credibility comes from these insurance companies that have been around for generations, and they have withstood the test of time, recession after recession. And so you certainly, anytime you enter into a relationship where there's trust and credibility, you will be successful.
Absolutely. And so it just at the end of the day, as we went through the conversation, the financial advisor just said, can you offer these things to my mom in this current vehicle that she's in? In this variable annuity, can she get 100% protection, not only of her principal, but also of the money that she makes? And she said, no, I cannot. Can you guarantee a lifetime income? No, I cannot. So with that being said, Mama Donna, do you want to continue to stay in this product that you've already seen has lost? Or now do you want to move forward? And she said, no, I want to move forward because that makes sense. And ultimately, the lady sitting at the table, the financial advisor said, yeah, I can't do that. You should go ahead and probably move it.
Yeah, that was such a game changer for you and I, and building up our confidence and knowing like, wow, this license that we have is powerful. Like this license that we have can really save our clients' lives and give them back their life. I remember Mama Donna, who could have retired at that time when we sat down with her. At this point, she was just working because she really enjoyed what she does for a living. But just to think about giving her the freedom to be able to say, hey, Mama Donna, if you want to retire today, you can. Your money is protected. You will never, ever lose a penny from your principal ever again. This dollar amount that we're starting with, it can only ever grow in an indexed vehicle. So the second story that we have is, and all three of these stories are super personal for us, but this second story is Aunt Val. And Aunt Val, believe it or not, was our very first annuity.
First client.
We were rookie licensed agents, but we just wholeheartedly believed in the product and just looking for someone to believe in our ability to sit down with them, to educate them, to show them the power of this product. And it was Aunt Val. She came to us and said, hey, I have this money sitting in an account. Everybody at my job believes fully into the company's retirement plan, but I'm watching my numbers. That was different with Aunt Val. I do want to say that out of all of our stories that we're going to share today, Aunt Val was actually watch her numbers. She could see that she was losing money. So if you want to kind of talk about that experience.
Oh man, Aunt Val was funny because, you know, she was like, man, I see this going up and down, Ellis, but this just don't make sense, and I want something different. I don't want to keep losing money. I work too hard.
She was cursing.
Yeah, yeah, Aunt Val is a colorful person.
Yes, she's a colorful personality, but she was so much fun.
Yep.
Just so honest, and yet the one thing all of our clients had in common was so financially fragile.
Yes, absolutely. But she was just so trusting of us. And she was like, you guys, you know, I trust you guys because anything that you get involved with is not anything, you know, shady. And so if you telling me this is what it is, then that's what I'm going to do because I need to move my money, you know. And she was a very easy process. No one was fighting her. But one thing that she did try to do was let all of her colleagues know.
She immediately went to work and said, hey guys, I know all of you have your money into the company's retirement plan, but I want to tell you about an annuity. Like, it's an alternative plan. Each and every one of us should explore it, at least become educated about it. And nobody listened to her. They even tried to convince her that she was crazy. It wasn't the right vehicle. She didn't know what she was talking about. And as life would have it, what happened next?
So we did that rollover in 2018, and she kept telling them for a few years. And then obviously March, April 2020 rolls around. What happens? COVID.
Pandemic.
Right? The pandemic. And as accounts are plummeting, I gave a call to Aunt Val. I said, Aunt Val, how you doing? She said, I already know why you calling. I'm all good. I haven't lost $1 in my account. And all those knuckleheads at work that didn't listen to me, now they're regretting that they didn't listen to me.
Is that your version of how Aunt Val talks?
Yes, that's my version of how Aunt Val talks.
She actually does talk like that, though.
But with a little bit more colorful language.
Oh, yeah. I tried telling they bleep, 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 bleep. But yeah.
Yep.
She was so happy.
Yep, so happy. She's just another happy family member that didn't lose $1, is going to be able to retire comfortably based upon, you know, the safety of an annuity.
I think what I love about Aunt Val's story is she is a client who became an agent because she witnessed firsthand the transformative power of our financial products. That life insurance extends way beyond life. Life insurance is for the living. And there is wealth building power inside of these products that people don't even realize. So once Aunt Val saw for herself with her own eyes, with her own money, her own investment, what we were able to do for her, she wanted to give the gift of legacy to everyone else that she knows. Yep,
she implemented it for her daughter, her grandson, you know, immediately, you know, making sure that they were protected with IULs.
Yep.
Right, getting them started. Yeah, that was powerful. And so thank you, Aunt Val, for the colorful story.
Thank you, we appreciate you.
Right, and so our third story we'll hop into is Auntie Nita. Auntie Nita was another great example because hers is a little bit different than the first two. And so Auntie Nita, you know, is an example of coming on board as an agent first, right? And so she was seeing what we was doing. She was like, I'm interested in, you know, just picking up some extra income on a part-time basis. I love helping people, and I want to make sure that people understand the insurance industry. So she got on board, she became licensed, and then she learned of the annuity. And then eventually, she reached out to me and said, hey, I want to move some money. I have a brokerage account, which is different, right? It's a retirement account, but she owned her retirement account. It wasn't from a job. So she owned her own brokerage account. And she said, Ellis, I want to move some money. Now, one of the things that I had learned was just being different from a financial advisor, right? So I didn't go into the conversation saying, how much money you got?
Yes.
Because I remember what it felt like when that financial advisor asked me that question.
That's so important.
It was offensive.
Yeah, because some money is relative. Mm-hmm. Some money could be $3,000, it could be $30,000, it could be $300,000. And just to provide some context about Aunt Nita is that family member or friend that you may have that worked a wonderful career, never really known her to need for money. Children were provided for, stable. And so she was someone that you would think, like so many of us, like you and I, we assume that everybody has all of their financial ducks in a row. And not that she didn't, she was just finally educated about an alternative.
Right. And so once she learned about that, she said, well, you know what, Ellis? I want to do something, I just don't know what. So I said, well, let me pose the question to you this way. How much money are you okay with not losing? She said, I like that question. And so let me think about that. Let me get back to you. So she came back to me a few days or a week, whatever it was later. And she said, this is the amount I'm okay that I want to protect to make sure it's always there. I said, okay, cool, let's do that. And so drafted up her annuity, did the process, got her money moved over, and then, pandemic happened. So all of these clients that we're talking about, these examples, all happened before the pandemic, right? Unravel was about 2 years before. Mama Donna was about 6 months before. Auntie Nita was about the same too as well, probably about a year before the pandemic happened. And all of them we talked to right after the pandemic was going, hey, haven't lost a dollar, extremely excited, happy that I moved forward with this.
Yeah. So there you go, 3 stories on why our real life clients decided to roll their money over from their existing retirement account into an annuity. One quick thing though, I do want to mention with Aunt Anita. So each of those stories were unique in their own right. But Aunt Anita was very clear that she wanted to diversify her retirement account.
So she said, Ellis, I'm okay with a little bit of it being over here in the market.
That's important. I want everybody watching this to know that you do not have to roll over your full, account value. So if you have $100,000 in a 401k and a 403b in an IRA, you can decide what percentage of that money would you like to make sure will always be protected? And what percentage of that money do you want to invest into the market? What percentage are you okay with possibly losing? And that was Aunt Anita. So I just wanted to make that.
Yeah, that's very important. Yeah. Because she was different. She was like, I'm still young, Ellis. I could still play around a little bit, let some of this money go over here. I got time.
Yeah.
I was like, all right, sounds good, Auntie.
Yep. So thank you, Mama Donna, Aunt Val, Aunt Anita. So if you're still with us, you are in for the best part. We're going to talk about exactly what is an annuity and why do you need an annuity. So just kind of explain and briefly define what is an annuity.
Very simply, it's a contract between you and the life insurance agency to protect your money, that money for retirement, right? And it guarantees you a couple of things: principal protection, the ability for it to grow, and as well as to provide you with a lifetime income if you so choose or desire to have that ability. Some people just want the first two. I just want it to be protected and grow. And when I need it, I can just pull off of it, right? People have several annuities for different reasons. One can be for the lifetime income. Another can be just for a nest egg. And even another one could be, I just want to go ahead and pass it on to my loved one. And a fourth one that we don't talk about a lot is if you actually cannot get qualified for life insurance, whether it be from a medical background, cancer, stroke, some of those things, congestive heart failure, doesn't allow you to qualify for a traditional life insurance policy, you can actually fund your own annuity starting at as little as $100 a month, so that you can at least have because it also has a death benefit tied to it. So it's saving for retirement, and as well as the ability to pass on to the loved one when that day comes, so that you can be buried with dignity and leave a legacy behind for your family.
So do me a favor. I actually want for you to walk me through the process. So I am a client of yours, because not everyone can actually roll their money over into an annuity. So let's kind of talk about what some of those requirements are. I am a 38-year-old female. I have $100,000 in my 401k right now, and I still work for that company. Can I roll that money over into an annuity?
Well, first thing, what kind of job you got? 38, 100K in your 401k, dear?
Well, let's just say I'm a hustler.
You a hustler?
You know what I mean? I've been saving.
Okay, now, because 38, that's pretty young for 100K in there.
That's what I got.
Okay, sounds good. Sounds good.
Now, don't ask me for any money.
Okay. Now, are you still working at that company?
Yes, I
at 38?
am. I'm still working for that company. Can I roll my money over?
Unfortunately, Uncle Sam won't allow you to do that.
No, you cannot. And why is that?
Because you're still working for the company.
Okay.
And so at that time, the only option that you have is to make sure that your 401k is conservative, so that you don't play the risk of losing a lot of money if you if you want to do that. The other option is what I did. I stopped putting in my 401k and I start putting into an IUL. Right, so that 3 or whatever 6-7% that you may be putting into it, I stopped that to get that money back into my check, and then now put it into an IUL. But you may say, well, Ellis, they match me 3 to 6%. Understand, do you really think that a company is matching you because they want to benefit you? No, they're doing that because it's a tax write-off. That's all that it is, right? So it's not really benefiting you the most, all right? The most, especially for a 38-year-old, you can still put into your 401k. I'm not saying don't do it if you don't want to, but I'm also saying you want to have another stream, right? You want that strong foundation, which is that IUL. They will provide you that tax-free retirement, that stability, that principal protection, because again, you would not build a home on sinking sand, and we have not known one single person in America to sustain retirement solely off of a 401k plan.
So just to be clear, if I'm a 38-year-old woman with $100,000 in my 401k and I'm still working with that employer, I cannot roll that money over because I still work for that company.
That is correct.
And so what you have advised is for me to stop funding that annuity and divert that monthly contribution into an indexed universal life insurance policy.
That's what I would do. That's what I did.
Okay, I love that. So then what are the qualifications? How old do I need to be? Is there a certain age parameter for an annuity?
For annuity?
For an annuity.
Oh, no.
When most people can move their money over with no penalties, rules, or restrictions.
No, all you have to do is no longer work for the job anymore, right? You quit, you're done, you're gone. You can move it then. Or once you're the age of 59 and a half, you can go ahead and move your money.
So no longer employed with the company, or you're 59 and 6 months.
Yes, and they do count that 6 months, by the way.
They do.
They do count the 6 months.
Okay.
So once that's been determined, right, now you qualify for one of those things.
No,
right?
I have one other question.
Oh, what's that?
Some people want to know, is there a certain dollar amount? Like, is there a minimum requirement amount of money to roll over into an annuity, or even to fund an annuity from scratch?
Great question. So if we're leaving a job, we have a 401k there, or I'm 59 and a half and have the money there, the minimum amount is $10,000.
$10,000, guys.
Which is
your own annuity. You all can start saving for that and let that become a financial goal of yours over the next 12 to 24 months. Can you save up $10,000 to fund your own retirement account that you own, not your employer?
Right. I would say, and guys, everyone's situation is different. And so there is two options, right? You can come up with the $10,000 and dump it and set it and forget it, or you can start an annuity and pay a minimum of $100 a month, right? Two different strategies. They both work very well. It just depends on where you're at. But again, you need to. You have to sit down with myself or Jasmine to be able to walk you through that on a one-on-one basis.
the trade-off is so amazing. I'm just thinking about how, 401ks are, tax later vehicles. And we talked about that in a previous episode. So I'm thinking about if everyone actually had a chance to own their retirement and could be in the driver's seat of their financial vehicle, I think we would see so many more wealthy families.
Absolutely. So many more wealthy families like the Rockefellers.
Yes, 100%. So in summary, an annuity provides us with principal protection, potential for growth, death benefit protection, as well as lifetime income. And something that I love that you added was in the event that you have an uninsurable medical condition, you can also explore an annuity instead of a traditional life insurance policy.
Right.
So that's one of my favorite topics. I love the topic of annuities.
Yeah, I could definitely go on all day about different strategies helping people with annuities in retirement.
Yeah, so guys, we need more agents just like you with this license able to educate and protect everyday hardworking American families so that they can safeguard their financial future and build their legacy. And so if you're looking for another opportunity to make additional income, guys, or a possible career change, visit our website, schedule a time to speak with Ellis or myself. We would love to have you join the family. So until next time, don't forget to share this episode, subscribe to our YouTube channel, comment below. We love reading your comments, guys. Like this video, give us a thumbs up. But until next time, let wealth and purpose drive you to prosperity. Thanks for watching.